Hi, this is Robert Kiyosaki, and you're listening to Capital Hacking. This is the most important thing you can listen to today.
He's the one.
I have a dream.
With great power comes great responsibility.
I could do this all day.
This is it. Don't get scared now.
They may take our lives, but they'll never take our freedom.
Cinderella's story out of nowhere.
It's in the hole. That the only thing we have to fear is fear itself.
Capital hacking begins in 3, 2, 1.
Go back to Capital Hacking. Josh McCown here. Hey guys, I cannot believe it's been a few weeks since I got to talk to all of you guys and spend some time. Just want to thank our great friend and dear co-host in waiting, John Edwin. Always excited to talk to you next time you have time to be on the show. But in the meantime, we have a treat for you, dear Capital Hacking friends. We are going to meet today Charles Casanova, and he is a mutual friend introduced us, a great investor friend, Mark Peck. We'll have to get him on the big show here again soon. And Charles is interesting. He's going to teach us all about the new, I would say, niche in the world of real estate called co-living. I'm hearing it more and more over the last 6 years. I think Charles has a few groundbreaking ideas that he's exploring and executing on. I think you'll like it. He's going to teach us how he transitioned into real estate, how he learned how to raise capital, how he's using AI, which who doesn't love that? I don't know if any one of us needs a little more knowledge about that. We all need a little more knowledge of that. We're going to get that. We're going to find out about a really interesting business. I think you're going to love this one. Enjoy. See, this is what's great about podcasting, Charles. It's great to have you here. So Charles, tell us a little bit about your background and what you're building today for the audience who has not yet met you.
Yeah, absolutely, Justin. Definitely appreciate you having me on here. So my background is, up until about 10, 14 years ago, my background was in and around building and scaling small to mid-sized technology companies. So whether it be sales, marketing, operations, helped take a couple through acquisitions and one public. And about 10 years ago or so, I had what everybody refers to as their aha moment and really reflected and said, is this really the path that I want to go on? Am I tracking the way I needed to? Determined that it wasn't. And I was lucky enough to find a mentor to bring me into real estate. And that's when I knew chips were in the middle of the table and that's what we're doing. And so I became a real estate investor. And about 2 years ago, partnered with my now partner, launched a real estate fund, and became an owner-operator specifically focused on shared living, shared housing, single-family homes, small multifamily homes, of which, Josh, we started in the private workforce world. We evolved into adding in another layer of supportive housing for nonprofits, and now we're leaning in heavily into the independent living 55 and older market.
Yeah, no, so look, I think I want to tell you, we have a shared friend in Mark Peck. You're getting to know him. He's a great guy. Hey, Mark, I hope you're hearing this. I'm a longtime friend now, and we're partners on a project. But he said, I got to meet you because we're both in Philadelphia. We both love real estate and we love investors, helping them out. So why don't you share a little more about how I get it. Did you have a few exits in technology as well?
We did. And to your point, real quickly, I haven't had the benefit of playing golf with Mark, so maybe one day I will. But yeah, we had a couple successful exits through those technology companies. Really had tremendous opportunity to work with great executive teams and really learned a lot in terms of how to build scale organizations, which quite frankly translate into what we're doing today.
Tell us though, the epiphany of real estate and the mentorship. If you want to share, like, okay, that journey is interesting. A lot of our listeners, this Capital Hacking show has been on for 7 years. It has, one of the top 1% in the world in business and entrepreneurship. And a lot of us came through the revelation toward real estate and making it a business. So it sounds like you're like right up our alley. Tell us, what was the epiphany? What was the process to find a mentor? And what was that all about?
Hey everybody, it's Robert Helms, host of the Real Estate Guys radio program. And when you're not listening to our show, make sure you're tuned to Capital Hacking. You're going to dig it.
Yeah, so the epiphany was that no matter how hard I worked, I was only earning income with the amount of hours and effort that I was driving forth, right? And so it was at a point where I used to refer to myself as the weekend father, if you will. And so it just wasn't tracking the way I saw our family life and I saw the future of where we wanted to go. And so I started exploring different avenues that I could yield passive income. And so it was that long-term cash flow that I was looking for. And quite frankly, I started experiencing going to different conferences, going to talking to real estate experts, reaching out proactively. And I met this one gentleman randomly through a mutual introduction, similar to how you and I met. And it was very much, you've got to meet this individual. And luckily enough, we just resonated. We aligned together, and he took me under his wing for the early couple of years before he retired and then moved on.
You know, it's curious. There's a lot of people listening saying, hey, that's never happened to me. But what type of conference was it? Because you put yourself in the room. Was it a real estate? What was the actual name of the conference? That would help some listeners, actually.
Yeah, it was, it was the local South Jersey real estate investor association. And so they held little mini conferences here. And quite frankly, I've actually also flown out to Phoenix for one of, I did truthfully align it with a golf trip out there as well. So it was one of those mutually beneficial, but it was really a matter of trying to leverage those. And then subsequently, even in the last couple of years, in terms of raising capital. So a great conference that I went to was called Raise Masters, which is focused by Hunter Thompson. And that really helps focus on capital raising. A lot of people who I talk to, a lot of operators that I speak with, they know how to operate. They know how to identify properties, but they don't know how to bring the capital to the project to be able to execute. And that was something that I knew that I absolutely wanted to get aligned with. And that has helped me tremendously as well.
So we're about to jump into some of the cool stuff you've already taught me about your current business, but I'm going to double tap, as we sometimes say. If you went to Raise Masters, who I think I've had Hunter on this show years ago, and his colleagues, Adam Carswell and stuff like that from back in the old days when they launched that Raise Masters. But teach me, is it that your current Cohaven, is it a mix of you being the actual operator and also you supporting other great operators, or is it you the operator all the time in your current business?
Yeah, so that's a great comment. So we have at Cohaven, we have a three-legged stool. So basically we are our own operators. We're our own fund owner operators. The second leg, or the second stool, is we build our own property management company, specifically focused for the type of investments that we do. And then the third is what we call our own operator circle. So we do bring in other operators who want to learn our thesis, our strategy, how we go about doing it, how we raise capital to align with it. And quite frankly, we actually also go into different investments and projects together as well.
It's a great model. That's a great model. So someone who's a good operator could join your operators circle.
Correct.
And how many people have joined your operator circle?
So we recently launched that a few months ago. So we have just under 10 operators who are engaged with it right now. But I will tell you that we're quickly gaining ground. Now, the key component of this, however, is what we found is so many people join these communities, they join these groups, and about 90% of them are just there for learning and don't take activity and don't take action. Our goal was to focus on the 10%. So our goal, we're looking to cap out at 40 operators within our community. So once we hit that threshold, we're kind of closing the doors, because we want it to be purpose-driven. We want everyone to benefit from it. And we want it to be a true community that's doing projects and driving it together.
Now, is that a model that you've seen work for other groups? Is that how Raise Masters was?
No, it's not. I haven't seen that. I have not seen that in other environments. I haven't seen it in other groups.
That's good. No,
At least through my lens.
You can tell you've been in other industries because you're overlaying great strategy, and it's really a great three-legged stool. Now, the key to your business, which we're about to get into co-living and whatever components of that you can tease us with, because it's very interesting, and we're going to get to that. But go back to when you said something great, and I always clue in on this. See, capital is the ability and the potency to take action and create. So there's the financial capital, there's the human capital, and your three-legged stool is attracting both. The operators are human capital, and you're raising financial capital. Now, why did you think that would be one of your sweet spots? Because you said, when I went to Raise Masters, I realized that's a sweet spot for me. You said something to that effect. How did you know you would be able to put capital together? Were you doing that before, or did you have a network already that wanted deals?
So that's a great question. So Josh, in my past life, as I mentioned to you, held multiple roles within those technology companies. One of the roles was helping to raise capital for those companies. So different world. We were targeting VC companies, private equity, etc. It was at an enterprise level. However, I helped with these companies. We must have raised upwards of over $80 million in the different companies that I was a part of. So I knew that I had that experience. I knew I had that dynamic and insight. It's just a different animal when applying to high net worth individuals and or smaller family offices. So that's why I wanted to learn more of the details and the the specific components of it. But so when we bring that and then we bring the operators together, it's just so powerful, to your point.
I agree. I agree. And it is a whole different experience, but your background probably created a lot of muscle memory. Muscle memory, right? So now let's sit at your stool, Professor, and you teach us about the world of co-living. And first of all, how you found it, why you love it, and how does it actually work? Like some of us have only heard the word. We don't actually understand it.
Hi, this is Melanie McCallan. Josh and I are just so grateful for the many investors who have already joined us at Accountable Equity. Accountable Equity is so much more than a capital group. It's really a community of accredited investors that want to learn and grow together. I just want to personally invite you, if you want to find out more about this type of investment and see if it's right for you and your family, please visit us at accountableequity.com.
Hey, it's Hal Elrod, author of The Miracle Morning, and you're listening to Capital Hacking. Enjoy.
Yeah, so I'll take you back, like I said, probably about 2.5, 3 years. We were doing investments, we were getting good returns, and we finally hit a crossroads or a threshold of saying, we're getting strong financial returns, but what can we do that's meaningful? What can we do that's impactful as well? And with that, we just saw such a huge demand. I mean, it's obvious to everybody, the affordable housing challenge in this country, not only what it is today, but what it's been for many years. And it's not going away anytime soon. And so ultimately we started thinking about what are different dynamic solutions that we can come up with. Multifamily is always the go-to, but as we all know, over the last year, it's struggling a little bit due to different dynamics, etc. So we thought, how can we generate a multifamily-like return at a smaller scale for the everyday investor operator to be able to execute against that? And so with that, we thought back to, wait a minute, when we were in college, there was some component of this that we lived through, right? We're a bunch of people living in the same house, generating multiple layers of rent for one single door. And so with that, that's how we thought of it. That's how we started doing research on it. And we dove right in. The first thing we did was we built our property management company to make sure that we had the foundation, the scale to be able to drive it. And ultimately, Josh, the biggest thing for us was, how do we get the 2.5, 3x return on the revenue of what a single family rental could produce? That's no longer a strong cycle given interest rates, and then mitigate the risk of what multifamily was doing. That was just a sweet spot for us.
And is the model notes on these houses? What is a way for an investor to get involved? Now that we understand you're basically making more money per door renting it this way than renting it to one individual. Now, how do investors participate?
So there are two paths that we have. So one is a pure rental component for our residents. So that is where we're offering them the opportunity to almost rent by the room, if you will. So we'll go out, we'll acquire a 3-4 bedroom home, small multifamily, and we'll put in 5, 6, 7 individuals within that home. Compliance, zoning, all has to be aligned, and then also very much stringent house rules. And so with that, we're able to generate this type of revenue components. The returns are very strong. The investors join us in terms of acquiring those properties. That's one avenue. The other avenue, to your point, is in essence a note, where we ultimately go out, we acquire a property, we put a wrap on it, and then we turn around and do seller finance to individuals who may not have necessarily been able to qualify for a mortgage due to some shortfall of their credit for whatever reason, but they have the income to be able to support it. And they just need to build their credit score up to a point to be able to go out and own on their own. So we give them the opportunity to buy their room and then ultimately also buy another room so that they can rent that room out, generate some income, almost a modified house hacking, which then will increase their credit scores as well. And then they can go on and acquire their own primary.
Okay, that is kind of blowing my mind a little bit. So back to what I thought you were going to say. I thought you were going to say accredited investors buy a note, and then you take those notes and put them on a property or whatever. But that's kind of not what I heard. I heard you say Bill, who has a good job, can afford a room, can actually pay more than the rent and start buying the room. And then if he succeeds, he can buy 2 rooms and 3 rooms. What is he actually buying? How do you get Bill or Joe or Jenny on the, like, what are they buying week by week, month by month? Are they buying a part of the deed?
So they are. So it becomes a prorated portion of the overvalue. So we sell the property at a clearly at a higher price point than the existing value. There's some delta or margin on the interest rates that we're providing. We don't take advantage whatsoever of it, but we make sure that there are returns that are clear and sustainable. And then ultimately that buyer also has the opportunity to sell their room. They have the opportunity to then sell their room to another buyer. They can sell it back to us. So it's really a prorated portion of the overall home.
And you know, it's a pretty sophisticated model. So how do you build a team to create this or to operate this for the next 10 years? I mean, who's on your team? What are their job responsibilities? Like, how do you do it?
Yeah, so great point. So we actually have a relatively lean team. We make sure that we have boots on the ground in every market that we're in. We're currently in 4 different markets, mostly on the Sun Belt. And so we make sure, again, we have boots on the ground. We've got property management. We've got those who have been experienced with not just GC experience, because some of the homes we do acquire distressed properties and renovate them and update them because we want great conditioned homes for our residents. But ultimately, it's mostly around property management. It's mostly about the support of our residents and making sure that we've got a team that's on site, and then we have a team that is international for VAs. And I will tell you that my most trusted teammate is my AI partner, Maximus, who helps drive a lot of our operations as well.
I think, you kind of stumbled into a really cool thing. It seems like you are strong at AI utilization. So is Maximus an agent within one of these softwares? I don't know what tell us how do you do that? How do you leverage AI?
Hey guys, it's John Vroman, founder of Front Row Dads, and you're listening to Capital Hacking, the best investment you'll make today.
Yeah, so we built out Maximus. It's on one of the LLMs, the large language model platforms, Claude, etc. You can build it anywhere. So we have filled up Maximus over the last few years of all our conversations, our documents, our SOPs, our systems, everything. So it is our source of truth. And so it helps us in terms of identifying exactly not just what markets that we want to enter, but also as isolated as what neighborhoods and type of homes that we want to acquire that we think are going to align best with our model. We leverage it in terms of tracking to make sure our projects are on track. Our budgeting. It also helps us with research to make sure are we doing what we need to be doing. It helps us even in our capital raising, investor relations, everything across the full spectrum. Maximus is there to help support us.
So for example, today you and I wanted to meet. I got an alert via text. Did Maximus send that to me?
Maximus, that was Maximus at work. That is correct.
But what platform, I have to ask, because I like these types of things. So Maximus is AI, whatever. But in order to send a text, does he have to plug into some other kind of tool to do that?
So that's within our CRM. So we leverage GoHighLevel for our CRM for that. But Maximus has the simple way of saying it is we've integrated Maximus into GoHighLevel, into our CRM. So in essence, I never go into our CRM. I just tell Maximus what I want it to do and what needs to happen. And Maximus goes into our CRM, sets up the infrastructure, the workflows. And then also, as we were setting up for our call today, as we were going to have a recording, Maximus reads all my emails, all our recordings, etc., and then uploads all that content and notes into the CRM. So it's updated constantly without me manually having to do anything.
Well, I'll tell you, great job on all that. So for right now, as you grew this company, the way I understood it is Raise Masters kind of gave you some advice. How much have you raised to build the company to this point?
So we do small sprints, Josh. So we've raised under $15 million in capital, but we're at about 260 units right now. We're looking to, when we go through our offerings, when we go through our raises, we go for $2 to $3 million sprints. So we look for, a tranche of 10, 12 properties at a time. And that way we make sure that, we want to make sure our investors are able to point to the different homes that they're investing in and say, hey, that's a part of what I'm looking to accomplish, versus this large umbrella of 40 or 50 homes where they don't have an emotional tie to, or they can't see it.
And then that is a typical, like what we do in our business is we'll raise through a 506C Regulation D exemption. So you'll do the same thing. So you'll do one for like 3 million and then that'll be done and you'll do another one, or do you somehow stack raises into the same private placement? How do you have
we stack them? We have what's called a customizable fund. And so to your point, ours is a 506C. But we stack on, we don't have to redo PPMs every single time. So we just have one formulated, and we do a multitude of different offerings as we go through our sprints.
I feel like I need to learn that from you and see if that is applicable. But this has been great. Any other thing that I forgot to ask that you think a lot of listeners are going to be curious about or want to know?
Yeah, I appreciate it. I would say this to you. As we lean in on our thesis, on our strategy of really focusing right now on the 55 and older, the independent living marketplace, right now there's some 65 million people who are age 65 and older, looking to get to about 73 million by the time it's 2030. We see such a gap between those who can not afford to stay in their homes right now on fixed incomes, or they feel isolated, versus the other end of the spectrum, the $5,000, $10,000, $15,000 assisted livings per month. There's such a gap in between there that we're looking to tackle. And for us, we're looking to promote that message. Whether it's working with us, whether it's not working with us, that's fine. We're looking to promote that message and lift that segment up, because there's such a demand and such a need. So that would be my message.
Thank you, brother.
Thank you so much for having me.
Damn straight. We just got
buddy.
We got to the end of another great show, and everyone listening right now, you're the family and friends. Thanks for staying till the end.
That was so fun. And hey, hit the like, hit subscribe. We're here to serve you guys. That's why we're doing this show. Josh is not paying me. I'm doing this off of my quote unquote sweat equity, because we want to make a difference in your life. And then that ripple effect will continue to touch the world.
Hey, amen, brother. Please check us out on capitalhacking.com, all the social media threads. And yes, I know you've probably already sent this episode to one of your best friends. Thank you. We love you. Just go right into your iPhone, hit the plus symbol. We'll talk to you later. See you next week.
Share.